This is an example of preparing an income statement. This is problem 2-6 from the textbook. We're asked to prepare in good form an income statement for the dental drilling company. First thing that we need to do is we need to put the company name down. We need to put down the statement that we were preparing. I don't type well, so I copy and paste. We also, it didn't give it to us, but we need to have a time frame. So we'll use for year ended 12/31/17. It could be for the year end, the period ended, or the month ended. Okay? So we're going to start out with revenue, and we have the sales. Next comes the cost of goods sold. Cost of goods sold is also a revenue account. It's a contra revenue. It represents what did we pay for the items we sell. So it would be like this would be retail price, and this was our cost of the items we sold. This will give us our gross profit. How much did we make on each item before any operating expenses at all? So sales minus cost of goods sold equals gross profit. The next section we're going to do is going to be our operating expenses. So when we look here, we only have two expenses, selling and admin. They could be all lined out, or they could be summed together like this. That's okay. When we subtract our expenses, we're going to get our earnings before interest and taxes, or EBIT. This is also called operating income. So those all mean the same thing. So this is going to be gross profit, then had to cover our general expenses and our depreciation expense. Next, we would pick up our interest expense. How much did it cost us to use other people's money? And we see that our earnings before taxes, notice I'm only taking the I out of here, or EBT, is going to be $103,000. Now we need our tax. Tax will either be shown as a percentage, or it will just be a flat number as given here. So this would give us our earnings after tax or referred to as just net income. And I wish I could type. Go. So this is a simple, basic income statement, but this frame that you see right here, you're going to use over and over in business finance, so it's a good idea just to memorize the relationships here. Okay? Now they talked about cash flow. We would start out with our earnings after tax and add back in our depreciation expense. We add the depreciation expense back in because it is a non-cash amount. So here was the $56,000 plus 73. Our cash flow is $129,000. So if we had been cash basis operation, we would have reported an income of $129,000 and not an income of $56,000.